YouTube. We stream Fridays at 9:30 Eastern Standard Time live, and you can catch the replay any old time. So share, like, subscribe to the channel, and make sure you share this now because we have a really wonderful special guest today. I have known this gentleman for a few years now. I met him through the National Association of Real Estate Brokers. He is a phenomenal man of mortgage, I'm going to call him the man of money, because today we're going to be talking about money, and we're going to be talking about money for our investors. I know a lot of you guys are interested in this topic. So without further delay, Mr. David Atis. Hello, David. How are you?
Hello. I'm doing very well. How are you today? Thank you very much for having me on.
I am phenomenal, phenomenal. Really excited that you are here today and that you've taken the time. I know you have a lot going on, and our investors are so excited to get the information that you have today, because a lot of people out there think they want to invest in real estate and they're always like, show me the money. So you are on our Show Me the Money series here on Lyonsview Realty Financial Fridays. But let's start out by you just telling us a little bit about yourself.
Oh, thank you very much again. So I have been in lending for well over a decade now. It is really just amazing how I got into this industry. It really started when I was working back at TD Bank in their loan originations department, doing anything from home equities to regular consumer loans. And I had a mentor who was second in command, executive vice president of retail operations, and they had me meet a lot of the department heads. And when I got to lending, that's when my gear started going, and I met with both their head of residential lending and head of commercial lending, and I really gravitated towards the residential lending toward at that time, and it was just an awakening for me because I looked at lending as I have a couple different pieces of a puzzle, and it's my job to put the puzzle together to get the client the money that they needed. And that gravitated immediately over to doing residential lending for people looking at buying their primary homes, their second home, and also investing. So I've worked with investors during this time, and I've now gravitated over to solely working with investors where I love that repeat business where they're like, hey, I got a deal, I'm making money, I want to get another deal. And so the fact that investors really look at how much money can they make within a certain time frame, and I'm like, okay, let's see how much money we can make. And so that's how I gravitated over to RBI for some time now, where we offer fix and flips, we offer commercial loans, bridge loans, rental loans, and commercial as well. And so it's just really amazing as to what I've seen while working with investors, solely investors, and it's just been a wild roller coaster.
Awesome. Awesome. So one of the things that I heard you say was repeat, repeat, and repeat. So, unlike in the residential where it may be 3 years, 5 years, sometimes 10 years before a past customer may come back and say, I want to do it again. You're right. On the investment side, people want to do multiple deals, a year, sometimes a month, depending on how large their team is. So it's really great that you're in this area specifically and solely in providing financing to the investors out there. So you mentioned a couple of different things. You mentioned commercial, you mentioned there were like three. So can you kind of break down what those three areas are and what types of properties those are or those represent?
Sure. So we focus on quite a bit, but I would say the top three that we're seeing right now would be fix and flips. So fix and flips is when we have someone that finds a property that might be a little distressed or very much distressed, and it needs a lot of renovation to bring it up to market standards. And so what they do is they reach out to me, and I take a look to see what condition the property is in now, what's it worth currently, how much work do they want to put into the home, and what is the ARV, which stands for after repair value. And based on that after repair value and how much work needs to be put into the home, we're able to provide financing for that deal. For any of our products, also, we don't ask for their income. So we don't look at their W 2s, their 1099s, their tax returns. The only thing that we care about is the income generated from that specific property. The next thing that we focus on, I would say, is our rental loans. Our rental loans are also known as DSCR, debt service coverage ratio. So, what that means is we're looking at the income on a monthly basis, how much that is generating. Does that cover the mortgage payment over 30 years for that loan? And as long as it does, look, we have a deal here. The next thing that we also focus on is commercial. So our commercial lending, it could be anything from a warehouse, office building, retail. And for some other types of commercial space, we have an outlet channel for that as well. And then one last thing, if I could add, that is our new construction. So we could have an investor that has a piece of land that they already own, and they want to develop that land, whether it's a single family home, a 2 to 4 unit home, a big block of homes up to, let's say, 20 homes that they want to do. We can work on that as well. So we have a pretty big amount of space as to options for our investors.
That is remarkable, and people are looking for what you are providing. The locations, like, where can you service clients?
So we're almost essentially nationwide. So we service all of the East Coast, all of the Midwest. When we start getting west to like uh, Alaska, North and South Dakota, Hawaii. We don't do some states out on the West Coast, but we essentially do all of the East Coast and all of the Midwest and a good amount of the West as well. We're in 40, 41, 43 states.
Do you do California, Tennessee, Dallas,
So we do
Michigan?
Tennessee. We do Michigan, we do Tennessee, we do Texas, and we have a channel for California where we can broker that out. Those that
Gosh,
state's one that we would broker out, Alaska and Hawaii. But the other states, we would do that in house. We're a direct private lender.
I said the state of Dallas because Dallas is so big, but it's actually Texas. that's a that's a an inside
Yes,
joke.
absolutely. There's a lot of work going
People
on in
call Dallas.
Texas, actually. I actually, it was
Yeah.
not this week, but last week. I have an investor. They have a multi-family home, and they wanted to do another one. And so that's funny that you bring up Texas, Dallas, Texas. A lot of people moving out there, and so that's definitely a big one that a lot of people are flocking out to.
The Carolinas, North Carolina, South Carolina.
Yes, we do, absolutely.
Awesome. Awesome. It's funny because sometimes people look at investments from, when you say single family, multifamily. So on the fix and flip, do you do single family homes as well as the multifamily? And when you say
Absolutely.
multifamily, are you talking about four and up, or you do the
Four and
one to
up.
four as well?
So
Mhm.
we do single family, multifamily, four and up. We can do a condo, for example. So
Mhm.
we're headquartered in Miami. I'm in their Orlando location, and especially in Miami, there's a lot of condos out there, especially let's say Philadelphia as well. So we could work with investors in doing fix and flips on those condos.
Gotcha. So you said it's basically, you're not looking at W-2s, you're not looking at tax return. Do you look at the credit score of the investor?
That is something that we do look at. So ideally, we would like the client to have at least a 620. However, money does
Mhm.
talk. So if they are under 620, the more liquid reserves that they have, the more assets, cash they have, cash speaks. So their credit could be lower than 600 and into the 500s. But if they're looking at making a substantial down payment, that's definitely something that we can add into consideration to get them the approval that they're looking for.
Gotcha. Gotcha. So, and then the rates, I know rates are subjective, especially in um, the investor space. Typically, what are people looking at in that area? Is that something you can discuss?
Yes. So I would say, you got a good point where rates are subjective. It obviously depends on what their credit score is, how much down are they looking at doing, what the nature of the deal is. So I would say, for the most part, for our products, uh, I would say a baseline for all our products, it goes from 6.99 and up, just dependent upon what the product is.
Gotcha. And do you all service the loans? Is it private, in-house, third party servicing, or do you
That is
sell
an
the
amazing
loan
question.
after a period of time?
I love that question. Not many people ask about that, actually. So I love the fact that you bring that up. Uh, I had met with an investor who said that he was tired of who he was having his loan service through. As soon as his loans were closed, they were immediately sold and packaged off to another servicer, and he really was frustrated with that servicer. He loved the fact that we service our loans for the life of the term. So most of our
Mhm.
terms are anywhere from 1 to 2 years, and they're due at the end of that term, whatever product and term that they do. The only one that we do not service would be our DSCR, also known as our rental loans for 30 years. So that's the only one that we don't
Mhm.
service. However,
Mhm.
all the other products, the commercial, our fix and flips, bridge loans, construction loans, we do service those all in house.
Okay. And so we're going to break it down in terms of this next question. For each of
Yes.
those categories, can you talk about the time frame, kind of like the process that happens? So let's say we'll start with a fix and flip on a single family residence. The person has to acquire the property. At what point does the financing kick in? How long do they have to do the renovations before? Like, what's that process for? You know, fix and flip, single family, fix and flip, multifamily, like that.
Great question. So the way that would work is we really would prefer you to find the property first. It works a little differently than, I would say, the someone who's buying a primary residence for themselves to live in, where typically they would reach out to the lender to get a pre-approval, and based on that pre-approval, they can go out and find a home that they would qualify for. This one's a little different. The way that this works is we again look at what the income generator from the property is. And so it's very property specific. Every property has different numbers that it can generate. Two different homes could be very on the same block, could be difference in size, difference in bedrooms and bathrooms. So that can change some numbers around. And so the way it would work is the investor, whether they're experienced or new, they will be able to find a home that's either on the market or off the market and reach out to us and say, hey, I have a home and it's worth, let's say, $100,000 at the moment. And I really think that if I put $50,000 worth of work into this thing, it could be worth 250 at the end of the renovation. I'm like, okay, great, let's take a look. So I take a look, see what I can generate for their loan amount. What we'd look at is the lesser between what's called the loan to cost and the after repair value. So loan to cost is when you take the purchase price, in this example, $100,000 plus $50,000 worth of renovation. And there is a particular ratio or loan to cost that we look at for that, as well as what the home is going to be worth at the end of the renovation. And there's a certain percentage that we generate for that as well. And the lesser between the two would be their loan amount. And so once we have their loan amount set and give them their terms on their particular deal, let's say it's $50,000 in renovation, so it's going to be a 1 year loan, not that big of a project. So we should definitely get the project done within 1 year. And so what they would do is take our pre-approval letter for that property, make an offer. We also advise at the time that they're making their offer that they bring a trusted general contractor to that home so that they can do what's called a scope of work. That scope of work is going to be a whole list detailed of all the work and renovations that they're going to make. It could be a full renovation of the kitchen, the bathrooms, the flooring, the paint, some landscaping. We could repair and replace the air conditioning system, for example, the roof. There's a lot of different things that could need to be in repair of that home. And so the contractor would say, okay, based on this renovation amount that you have, we are fitting all of this in that number here, that $50,000. And so after that, the seller says, yes, I will accept $100,000 on this property. Awesome. We have ourselves a contract. So from there, let's say we get a 15-day closing, for example. Depending on what kind of speed our uh, appraisal friend and title friends are going to be able to get the deal done, it's definitely going to be important as we're trying to make this all done before closing. So what we'll do is we'll send this over to our underwriters. They'll take about 24 to 48 hours to get an approval, and we'll then get the appraisal, the a title report in, and be able to get that all back to the underwriter for final approval. We'll be able to close within that settlement agreed closing day, and then from there, now it's game time. What's going to happen is the owner, the new investor, or the experienced investor, they're going to take their funds and be able to do, let's say, $10,000, $15,000 worth of work, for example, at a time, and they go in stages. So the contractor, let's say, first works on the kitchen, for example, we'll send out an inspector to make sure that all $10,000, $15,000 was spent and allocated towards that kitchen. And then from there, we say, hey, all right, all that's done. Here's the $10,000, $15,000 back. And they're working in stages. So once all the stages are complete, then the home is finally remodeled. And that process took, let's say, for example, 6 months. Now it's either time to refinance this loan into a long-term loan if they're going to put their own tenants into the property, or they're going to contact you and say, hey, Claire, I'm all done my renovations. Can you help me put this home on the market? And you're like, I got you. And they get the home sold within 1 year. That settlement happens and they pay our loan back. They have their proceeds. And they're like, wow, I have this much profit. I want to do this again. And so that's where that repeat business comes into, where they're looking at what profit they made and I want to get another deal done. So that's essentially what the life looks like. The life of the loan looks like for a fix and flip.
Gotcha. Gotcha. And then there's something that you said, a couple of clarification
Please.
Things. So you said you reimburse them the cost of the repair. So they have to have, do they have to have the money for, I think you were talking about the kitchen.
Mhm.
Do they have to have that $10,000 for the kitchen up front? Or the contractor has to be able to float those, the cost of doing those repairs until the work is done before they get paid?
Another great
Is
question,
that what I
Clara.
heard?
Good, that is correct. So the way we would primarily work in is by them putting up a certain amount of money up front and being able to pay for that a particular project that they're starting in the home right away. And they get reimbursed once
Mhm.
that project is done. So it works in draw stages. So once that project is done, we would then they would pay a draw fee. It could be like, let's say, for example, $375, and then that's
Mhm.
what the inspector requires to be able to go out to that property and do the inspection to show that that amount of money has been spent into that home. Another thing
Mhm.
that we could do is we could have them, let's say, oh, this is a great example. I have someone who owns a home in Philadelphia, and the home right now is
Yes.
worth $86,000, and they own it free and
Mhm.
clear. There's no liens, no mortgage on that property that they have right now, and they're
Mhm.
asking
Okay.
for, I believe it's $60,000 to renovate that home, and so they have a lot of
Mhm.
equity. And so what we're doing is we're taking the equity that they have within the home to pay for that $60,000 worth of renovation that they want to put into the home can be done in stages with another $10,000. So they can borrow an additional $10,000 on top of their $60,000 renovation amount to pay for that draw stage. So that's out of pocket.
Mhm.
Or if they're buying a home, for example, if they're putting a more substantial down payment than our minimum, we could also
Mhm.
advance the funds as well. So we can be very flexible depending on the nature of the deal with either reimbursing or giving them an advance.
Gotcha, gotcha. And then, in terms of the fix and flip and the appraisal process, does the condition of the property matter, or is it all based on after repair value?
It does matter. So the thing that we're going to do when we order the appraisal is what's called a feasibility report. So what we'll do is we will take the general contractor's scope of work and provide that to the appraiser, and they're going to do two different types of inspections. They're going to take a look at the current as is value, whether it's just a great home in good bones, but it just needs a lot of cosmetic work, or it's very distressed and there's subflooring here. There's walls that aren't they don't have any drywall on them. So it really doesn't matter as to that kind of stance as to the condition of the property, but they look at what it's worth currently. They'll take a look at the scope of work of the renovations needed to be made, and then they'll create a feasibility report showing that the scope of work will, in fact, create a higher after repair value. And then, based on the scope of work, they'll be able to provide us with what that after repair value is.
Gotcha, gotcha. Thank you for that. That's great clarification, and that question comes up, a lot because people don't really understand where the appraisal fits in. And on for me as on the real estate professional side, just the timing. So some people say, "Oh, yeah, we can get this deal done in 2 weeks or a week." And like you said, title and appraisal have to be done, in most cases, uh, on on the property,
Yes.
to move forward. So, yeah, thank you for that clarification. I want to jump to the bridge loan because a lot of people don't know about bridge loans and how they work, and what's your process for financing in a bridge loan situation.
So bridge loans are so interesting. What you're doing is you're taking equity that you have in a home and you're getting a loan based on that equity. One interesting thing that we've done recently was someone was living in their current home. They had a very small mortgage balance. I believe it was something like 60,000 dollars, somewhere around there. So they did have a balance on their home, but they had a lot of equity. The home was worth like somewhere around $375,000. And this one was actually, you mentioned the Carolinas earlier. This one was actually in the Carolinas. And so
Mhm.
what they had to do was sell their home to be able to buy a new home. But the issue was is that they couldn't qualify without selling their home first, and they didn't have their home on the market. And the great thing about this feature was being able to buy the home that they wanted to purchase. They were going from a two-story home to a one-story home, and they kind of were going around the same square footage, but they didn't want the stair. They couldn't
Right. Navigate the
mobilize
stairs anymore.
the
Yeah.
stairs. They were getting to a point where they're like, yeah, I just want one floor. It was a very nice rancher. And so what we were able to do was give them a loan based on the amount of equity they had within their home. And at closing, the only requirement is, even though it was used as their primary residence, the whole stipulation was at the time of closing, they had to vacate this uh, primary home and go into their new home. And so that new home would then be their primary. It
Mhm.
gets vacated, would be treated as their
Mhm.
investment property. And so this way, they were able to get into their
Mhm.
new home without putting their home on the market and kind of rushing the new buyer. Now that they're in their new home, they're settled, they can then put their home that they're vacating from on the market and sell that within the 1 year term that they requested. And so that's a great feature of a bridge loan where you're taking equity that you have within a property. It can't be used as your primary residence if you're going to stay there, but as long as you're going to leave that property and it will now be an investment property, we'll be able to lend against it.
Gotcha. Gotcha. I'm gonna let you pick the next one because I was going between the land and the multifamily, but um, which one would you like to jump into next?
So I would go into our construction. That's the one I want to get into next. So you mentioned land. So one thing that we did face through uh, the last few years from 2020 to about 2022, one thing was how interesting things happened with real estate. And we got to a point where we became a little overexposed on the amount of land deals because there was a lot of deals going on left and right. And so we got a little overexposed. So we actually just put a pause a couple of months ago on our land deals. But as long as someone owns their land free and clear, let's go ahead and get a construction project done. And so what we love seeing is brand new constructions. It's one of my favorites personally. Just seeing the creativity of a person who says, all right, I want to design a home this way, and just seeing that come to fruition is pretty fun. What we look for in our construction deals, again, is having that land owned free and clear. We would then need a scope of work, as I mentioned earlier, from the general contractor. We also ask for the general contractor's history. What does their history in terms of the work that they've done? What does that look like? Can't be their first project. They got to be experienced, and so that's definitely something that's
Exactly.
very important. Absolutely. And so one thing that you also want to do is just know what that value is going to be once all the construction is done. So we take a look at, again, our total loan to cost or our after repair value. And that's definitely something that we take a look at to see what we're able to do for that particular client. So one of the things that we see with construction loans is that they can tend to be, I would say, a little bit more involved in terms of like the documentation because we have to have permits and plans approved, and that sometimes
Mhm.
takes time. And so we want to make
It
sure
does.
it's what's called land ready. You want to get all that done. So we take a look at the plans and the permits that need to be done. That's considered soft cost. And so the buyer or the investor, they need to have all those. We recommend that they have all of that done before reaching out and starting on that loan process because time is ticking. Our terms for our construction loans are either 1 to 2 years. And so if the permits are going to take some time, we recommend that they be able to get all that done so that they're not using the time of the loan where the hard costs will be used, like the materials and the construction of the actual land using concrete, pouring concrete, getting the foundation established. We want to use that during that loan period. And so we really recommend that they get all their permits in place in a good amount of time before reaching out to us, so that time clock, that countdown, once that loan starts, is solely used towards that building of the home. All our products, we have a minimum loan. We have sorry. All our products, we have a minimum loan
No,
amount
keep
of.
going.
Okay, we have a minimum loan amount of $75,000, and we go up to $5 million. So we can do a pretty nice home for that project. Again, that takes about a day or two in underwriting, and it takes about 15 to 21 days to close a construction loan.
Okay. Okay. I, is that the construction loan is the one that um, it's a 30-year, whatever the product is, to hold the note on it or the servicing on it,
So
or
the new construction is going to be 1 to 2 year term. The only loan that we
still?
have that's held for 30 years is going to be our rental loan product.
Okay,
So
gotcha.
if this
So
is something exactly, so
after
after
the
you're done the
construction is
project,
done, they refi it.
you could
You
renovate, you
refi it.
can refinance that loan into a long-term rental loan if that's your plan, or if you want to give Clara a call and get that property right on the market. Hey, we got a brand new. There's a lot of shortage in inventory right now, and so they reach out to you and say, "Hey, I have a brand new construction all ready to go. I want to put this on the market." Reach out to you, and you get that thing sold pretty quickly.
Gotcha, gotcha. That's pretty amazing because um, a lot of investors are utilizing their own funds. You know, some I think because of not understanding a lot of the products that are available. They haven't heard of RBI and David Atis, the mortgage man, mortgage money man, different, the money man. And also because I have one investor that just doesn't, the rates, and I'm like, it's for a short period of time and you're not using your money. So the rate is really not relevant. Are there draws? Because I know with some companies, there's a draw of interest only payments during the course of that year or 2 years that the project's being constructed. Is it the same? Or like what's
Yes.
due from the investor during that time in terms of interest on that money? Hmm.
So all of our loans, except for the long-term 30-year loan for the rentals,
Hmm.
the rental loan is the only one that's going to be principal and interest for 30 years. All the other products, the fix and
Hmm.
flips, the bridge loans, the commercial and construction, those loans are going to be interest only, anywhere from 1 to 2 years, depending on the size of the projects. So most of the projects are going to be about, I would say, 1 year. But if it's a very sizable project, let's say like a very very big loan, we would extend that up to 2 years because of the size of the project that's going to be undertaken. And they would also be responsible for paying their own escrow. So the insurance, they pay that outside of the loan, as well as the property taxes whenever they're due on a monthly, quarterly basis,
Gotcha. So
or
that interest
annually.
only payment, is that due at closing or due after the 1 or 2 years, that interest only payment?
The interest
When
only
is that due?
payments, it begins on a monthly basis. So every single month, right after closing, those interest payments are due, calculated by the size of the loan.
Gotcha, gotcha. Thanks for that clarification, because that's one of the things that new investors may not know, and for seasoned investors, um, you know, they always want to know kind of how the terms work out for using their money versus using someone else's money. Yeah. Yeah.
Absolutely.
So
Absolutely.
indeed. So we covered fix and flip. We covered land, new construction. We covered, we didn't cover multifamily. I don't think yet. Yeah, no, we didn't
So,
cover multifamily.
so yeah, you could do a multifamily with all these other product. The only one you wouldn't use multifamily is in commercial because it's a commercial property. But yes, you can do any type of other loan on commercial as well. The new constructions, the fix and flips, the bridge loans. That's definitely something that we can do. One really interesting thing is I'm doing a project where they have it's like a very sizable property. It's about 5,000 total square feet, and there was just it was technically used as a one unit home. And so one thing that they could do is a fix and flip where, depending if that city would require permits, so if it needs permits, got to get the permits for it, but they could convert a one family home into a multifamily home. Depending on whatever they can get permitted, that's important. But if they can get permitted for a two, three, four, if they can get approved for financing or for a permit for more than four, it all depends on to what the city would require. But that's definitely something that can be done as well on a fix and flip or a new construction multifamily home. So that's one of the things that also does generate some additional income. How many doors do you have? And so obviously the more doors, the more cash flow we have. We love that word, cash flow. So multifamilies are definitely something that a lot of people really do love seeing because of the cash flow that can be generated from it.
Gotcha. Have you ever had a situation where, uh, let's take that scenario where they're converting it from a single family to a multi-family use, and there weren't appraisal comps or in the area for that type, the new structure, the new multifamily structure. Um, have you ever had that situation? And if yes, how did you guys handle that?
So fortunately, there have been multifamilies already in the areas. So I haven't faced one yet where it wouldn't be, but I would definitely say, in my experience in lending, it's just really the appraiser just saying, okay, it's not in that area, but they have to increase uh, their square mile radius to find more exactly to find more properties that are similar to be able to generate proper comps, comparable properties. And so they might have to extend their search radius to do that. And so they'll be able to then calculate as to, okay, based on this, this search being extended, but looking at the subject property that we're looking at in that particular area for a property like this, I deem that this property is worth X dollar amount. And so that's essentially how they would do it based on my experiences on other types of deals. But that's essentially how the appraiser would go about that.
Mhm. Okay, great. Anything else that you want to share about the products that RBI provides or information that you think would be helpful for a new or a seasoned investor?
Yes, I would definitely suggest talking about our commercial projects. One type of thing that we see in some densely populated areas, whether it be in Newark, New Jersey, or in Philadelphia, are mixed use properties where they have a commercial unit on the ground floor, and then above they have one, two, three residences right above, all in that same property. And so mixed use properties are definitely something that we're seeing a lot of people being attracted to because they could get some serious cash flow from the business whatever business that might be on that ground unit, and then being able to get additional income from the units above. So that's definitely something that we'll be able to take a look at and be able to lend on those types of deals. Another one would be just a general commercial deal, whether it might be, let's say, a retail space or a warehouse or offices. Those we do lend on as well. We have both short term on those, where if they're in need of doing some work, we take a look at that as well. And then if they need some long term funding because they're going to be there for quite a while, we do have long term commercial funding available as well. So that's one thing that we don't have a lot of investors doing that so much, but it happens. And so that's definitely there's also people who focus solely on commercial as well. So it's not just the one family home or multifamily 4++ units. There's a lot of people that solely look for commercial deals as well. So that's definitely something that a lot of investors see attractive.
Awesome, awesome. This has been wonderful. I've learned some new things, and also I'm really excited about the products and the process that RBI offers. If you could, there's three dots above your name. If you could add your contact information to your screen, because this the people who are
Yes.
seeing the video will actually have an opportunity to see this into the future. So that'll be helpful to have an email or a website, whichever you prefer, there, and or your phone number if you'd like to do that. And also just share verbally for those who are listening in how people can contact you if they're interested in your services.
Yes. So I can be reached. My name again is David Atis. That's Atis. And I can be reached by email at atisdavid@rbialliance.com. And then you can reach me right at my cell directly at 856-745-8725.
Awesome, awesome. Actually, you put the information in our chat, but by your name,
Oh,
where your name
okay.
says rename
Let me put
yourself,
that in. There we
you
go. Viewer
can
comments. I
put it
see that
second.
right there. I'm not sure if I can do it. I'm
Yeah,
trying.
you can put it up under
You
yeah,
said
under
under
your
where?
name as a second line. So while you're working on that, I'm
Oh,
gonna
okay.
under your name. There's a
I
yeah, there's a
see.
second
Let's
line
go
there that
ahead
you
and get that done. There
can
we
add
go. Thank you. All right. Got it. Thank
add
you
that
so much for pointing
information.
that out.
So I just want to yeah, I want to thank you for taking the time to join us today, for sharing information about your company, your products, and the services that you offer. I've worked with David in the past. He is a phenomenal person to work with, just knowledgeable, easygoing. He reminds me of myself. So at Lyonsview, we have ESP, which is expertise, solutions, and patience. And we provide that before, during, and after the sale. And I can say that David also uh, possesses those attributes. So if you are looking, we assist sellers, buyers, and investors to build wealth in real estate professionals to build careers in real estate. So I highly recommend David and his company for those investors out there who are looking for financing for your investor deals. So if you receive something of value today, definitely share and like this broadcast with other people. Subscribe to our channel. You can find me at Clara Lyons-DeVaughn on all platforms: Facebook, Instagram, LinkedIn, and YouTube. David, are you on Facebook? Where where can people find you?
Yeah, I they can find me on Instagram at ATIS David 12100. I am also on Facebook as well. by my first and last name, or actually I have my middle name in that one. So David, it's facebook.com/david.atis.3. But there was one thing that you said in ESP. If I could add to that, it's the P in patience. That's one thing that I really feel
Mm,
as if that I personally have that differentiating factor, and I've noticed with you as well by working with you over all the years. It's that not many people in our industry, both on the real estate side as well as me on the lending side, have that patience. Sometimes you might find where I've seen where people are very new, a new investor, and they don't have patience explaining everything to that individual. And it really does take, I feel, as if patience, because you never know of a new investor who's just looking for information. How do they move strategically? And they just really want to learn. Having someone that can be patient with you and guiding you through that is definitely important. Or even patience with the loan amount. There's some times where they could go down to a low dollar amount, but because it's a low dollar amount, they don't want to deal with that individual. I look at it as you never know by guiding someone through that purchase price, whether it's high or low, what can come after. And even if they stay low and they're very consistent on a particular market, great, awesome. I can make a difference in someone's real estate portfolio, regardless of what dollar size it is. So that P and the ESP patience, it's so needed in our industry, and I love that you bring that up because it's desperately needed in our industry.
oh, wow. Thank you for saying that. Thank you for saying that because that's one of the things that my clients definitely say. You are so patient. You know, the expertise, I think, you know, we know what we know in our areas, and also being able to provide people with solutions. Just having you here today is another way that, you know, we at Lyonsview Realty provide solutions to our clients and our prospective clients who are looking to invest in real estate. So I appreciate, you know, you taking your time to come today. And on the YouTube channel, there's lots and lots of contents of ways that folks can maximize their wealth building power now and in the future. So I really invite people to go to the YouTube channel at Clara Lyons-DeVaughn. You'll find Financial Fridays there, tons of information. And that information includes your mental, mental and your intellectual wealth. So it includes your health wealth and it includes your financial wealth. So David knows I've been plant-based for um, a while now. And so I'm really advocating for people to eat more plants. And I've got a book coming up, the Daniel Fast Guide. Doc, and you can go to the danielfastguide.com to pre-order the book. But there's lots of things in terms of our intellectual wealth, our financial wealth, our health wealth that's important to our overall wealth and building legacy as we move forward. So if you're looking to amp up on your intellectual wealth, check out our author series or our lifestyle series. If you're looking to amp up on your financial wealth, look at our show me the money series and on the channel. But there's a lot of information there, so definitely check it out. David, I just want to thank you again. And for our listeners, my name is Clara Lyons-DeVaughn. You've been listening to Lyonsview Realty Financial Fridays. We air on Facebook and YouTube live on Fridays at 9:30 Eastern Standard Time. And you can catch the replay on YouTube anytime, anytime. So until then, keep living your best life. David, thank you again. Love you.
Thank you. It's been a pleasure. I appreciate it.
You are so welcome. Let's see. I'm trying to end this here. Oops. And what did I do? uh,
we're live streaming. We can just do this every single day. Show them our new
Yeah,
day.
and yeah, we're still live, and I'm trying to figure out. I can't see the screen, so I'm trying to find it. Here we go,
Oh,
StreamYard Studio. Here we go. Okay, there we are. So thank you all for tuning in. Really, really appreciate you. Definitely like and share, and more importantly, reach out to David, get his information, reach out to him, and do your first investment project. You will be glad that you did. Take care.